I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is September 9th. It's Friday.
And today is your interest rate update.
If you're new to the channel, be sure to subscribe, comment, and like. We do this Monday through Friday, and this is not financial advice. This is for informational purposes only.
That's right, folks. We are not your financial advisors, but we hope to be your mortgage brokers. So here we go.
All right, 30-year fix today at 5.5%, 15-year fix 4.875.
The 30-year FHA, 4.99. The 30-year VA, 4.99. Boy, the same for the last couple of days.
Yes.
Are you sure this is like new stuff? We're not just copying and pasting this?
So that's right. This is the same. It's been pretty flat. The inflation report's coming out tomorrow. We're going to actually talk about that here in a little bit.
When we say tomorrow, we next week.
Oh, sorry. Next week on Tuesday. These quotes that we are showing you are based off of these loan assumptions for conventional FHA and VA. And they come with no extra fees, no buy-down fees.
Yeah, no buy-down fees, what we call points.
Yeah.
They have standard closing costs, but there's nothing extra, no hidden fees. I was just reviewing something, and they were talking about, hey, this product's got all these hidden fees. There's nothing hidden here. This is all above table, on the desk, as they say, on top of the desk, I think they say, nothing hidden.
Yeah, we're mortgage brokers, which means we have access to really good pricing. We really do have, I think, pricing that beats 90% of all banks. I was listening to some podcasts from real estate agents, from analysts, and lenders are quoting 6.25%, 6%.
Oh yeah, I can't tell you
for these 30-year fixes. So like again, 0.5%. The purchasing power a buyer would have if they had that 0.5% lower rate. It's so important.
Now, it may not be a lot of money to some, and I say this sarcastically, so hopefully this is not rude, but I mean, we're talking like $40,000, $50,000, $60,000, $70,000 over the life of the loan.
Yeah.
In savings because of these interest rates. So it's a big deal, month one, but it's a huge deal, year 30. You look, long term.
Yes. Okay, so the big inflation report, again, we're all kind of focused on, this year, especially with all the things, kind of the turmoil in the markets, inflation, what is it going to be? The expectations, so again, it's coming out on Tuesday the 13th, the report. The expectation is that it will be 8.1%. That's just what the analysts are expecting. Mm-hmm. Last month, it was 8.5. The month before that was about, I think it was 8.7, and it was 9.1 before that. So this month will hopefully, if it's at the 8.1 or lower, it will signal to the Fed that we're basically beyond the peak inflation.
Right. And all their efforts with raising these interest rates have been to get that number to come down. So a couple things. One is that number is still higher than what it needs to be, but even more importantly, they want they want to see it start to decline. When they see it start to decline, they'll know it will continue to decline, and what they're doing is working. What we don't really want to see is have that number go up and have them say, whoa, what we've been doing isn't good enough. Let's get even more extreme. That's where we don't want to go.
Yes. So where does the Fed, they're going to be meeting on the September 21st. So next week, September 13th is inflation report. Then the following week, it's Wednesday, the 21st of September. That's when the Fed's going to speak. They took a 2-month recess because the last meeting was July 27th. And they raised the rates, the Fed rate, 0.75%. This meeting in 2 weeks, well, a little less than 2 weeks, there's an 86% chance. This is based off of the Chicago Mercantile Exchange traders, how they're trading those options. They're the ones where basically the market looks at. They believe it's 86% chance it will go up an additional 75 basis points. Mm-hmm. And there was a 14% chance that it will rise 1%.
Right. And what we're saying here is not that the mortgage interest rates will go up by this amount, but this is what the Feds are doing to influence the market by what they call a short-term, Fed funds rate. So this is how they move the bigger market, which is the bond market, that affects mortgage rates.
That's right. So this is basically baked in. The mortgage rates have already moved. They're already
assuming the 86% chance, three-quarters of a percent rise or 14%. I mean, at the same time, they're baking that in.
So if on September 21st, the Fed basically surprises everybody and goes for the 1% rate, because it's only a 14% chance that people are expecting it to happen,
Yeah.
it will surprise the market and we'll see interest rates rise
Right.
if it goes up 1%.
Right, and it won't be as big of a surprise. It won't be as big of a surprise if it were zero. There were 0% chance that it went to 1.
Oh, yeah.
And then all of a sudden it did go to 1. Holy cow!
Yeah.
But so right now what we're saying is that it still would shock people because only 14 think it's going to go to the 1%. So the other group, the 86%er, would say, "Oh, we're wrong. Let's reprice."
Yeah, so if we get the 75 basis point hike on September 21st, the market's going to be like, okay, we were expecting that. Nothing's going to happen. I mean, that's basically how it would typically go down. All right, so we have November 2nd, right before elections, is another report, December 14th, February 1st, 2023. These are kind of the targets for the Fed. These are the high probability chances that we'll be in these ranges, but that's it. We're going to be back on Monday with another interest rate update. Be sure to subscribe, comment, and like.
All right, thanks, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.